Well, good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN Weekly for Saturday, June 10th, 2023. And our top story today, the stock market's breakout is getting support for now. And joining me now to discuss this and a lot more, Jane King is a financial journalist joining us from the NASDAQ. Jane, always great to see you. Thanks so much for joining us again on the program this week.
Great to be back, Jeffrey.
Yeah, well, we always appreciate your thoughtful analysis. Jane, give us your take on the markets this week.
Boy, have they been boring or what?
Yeah, kind of. That's a good, but I like that. I like when there's not a lot of volatility in the market.
I feel like it's a bit of news vacuum. We had the debt ceiling and we had, there's a Fed meeting and something else, big jobs report, all these things. And we really didn't have a lot of things driving the market this week. Now we've got the Fed meeting next week, so that, could change things. But we did enter a bull market, kind of a stealth move, but the S&P 500 officially in a bull market now.
So, if you're from the outside looking in, you follow this stuff every day, you live and breathe this. But if you're following this, if you're a person on the street, I mean, that's a good thing. Bull is better than bear, but is it sustainable?
Well, good question. I guess that remains to be seen. But look what we faced this year. We've had banking crises. We've had, the war is continuing. We've had continued interest rate increases. It's still inflation. While it's settled down a little bit, it's still up from where it was a year ago. So, we faced a lot of headwinds and still managed to gain. So I wouldn't be surprised if we see the market rise through the end of the year. Well, next year might be a different story, but yeah, looks pretty good this year.
Yeah, we're not going to put you, I would never put you on the spot. Prognostication, everyone's got an opinion, the old analogy. Jane, I want to ask you about something, and I don't think you cover cryptocurrency directly. I don't think it trades on the NASDAQ. Maybe some of the companies do.
Coinbase does. Coinbase.
Yes. So can I bring up SEC Chairman Gary Gensler? I think he had some choice words for some of the crypto companies. I'll leave it there. And I think there's a lawsuit that challenges Coinbase and Binance and others. What's the impact? I want to get your reaction to that, because a lot of people on this program, and probably people that you meet on the street, probably always ask you about crypto and Bitcoin especially. But what does that all mean for the crypto market? It seemed very unsettling.
Well, we did see Coinbase stock drop by quite a bit when this was announced. And there are two different situations. So Binance is an overseas company. They don't say they're Chinese. I'm not sure where they're actually incorporated, but CZ, the CEO of Binance, is Chinese, but it might be in Taiwan. I'm not even sure exactly where they're headquartered. And they had a U.S. platform, but they mainly are overseas. And they were allegedly saying they were commingling funds and taking people's funds and doing things. They've denied all that, by the way. Coinbase was a little different. They were saying they weren't registered. No, when you become a publicly traded company like Coinbase is, people have called it a financial colonoscopy. You go through so much paperwork and scrutiny by the exchanges and the SEC and all these regulators. For them to be a publicly traded company and then to be, it wasn't that long ago. I think it was 2021 when they went public. And then the SEC to come and, file this lawsuit. What I hear from the crypto community is that there's just no clarity on regulations in this industry. Are crypto, are they a commodity or a security, or how should it be regulated? And I think Coinbase's argument is, there's no clarity. We've asked for clarity and you haven't given us clarity, and now you're suing us for something we asked clarity about. So they're going to fight it, and we'll see. There, Mark Cuban, I saw, just came out in defense of Coinbase, saying that the SEC just wants to keep lawyers employed and on staff. And so, it's it's going to be interesting to follow. And I think the bottom line is there needs to be some regulation for this industry. It needs to be very clear what the laws are. And I think that would solve a lot of these problems.
Yeah, well, it probably would have clarity. And we've seen this in other facets of the investment world: collective investment trusts versus mutual funds versus ETFs versus stocks and securities. We certainly need that, and a market needs that. I guess we can expect choice words between both sides, throwing darts at each other until this is rectified, I guess.
Yes, but lawyers are going to be busy. So,
well, hey, look, see, this is an example going back to our conversation, I think last week or the week before. Artificial intelligence couldn't do this type of work, and this is where you need. So if you're looking to go to law school, this is where you might want to consider practicing. Jane King, always a pleasure chatting with you. Enjoy the rest of your weekend, and we look forward to having you back on the program again very soon.
Thank you.
And when we come back, we'll take a look at some of our best segments for the week. You're not going to want to miss it. Stay tuned right here on BRN Weekly. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms? Especially for the smaller businesses. I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Over the last 50 years, Mission Square Retirement has helped over 3 million public service employees retire well.
Call 4951.
Call 4951, 49 Monroe County.
This is Chief Stiles, signing off for the last time. I'm going to be 1010, 1042.
The Monroe County Sheriff and Monroe Police Department would like to recognize 5-1 Chief Troy Stiles for over 40 years in law enforcement.
And especially for over 31 years with Monroe Police Department. His dedication to Monroe and its citizens is greatly appreciated. He was an inspirational leader of our police department. And he was instrumental in building our Safe Streets program, both here and in Monroe County.
Judy, Lisa, and I will miss telling him where to go. Thank you for your dedication. Good luck in your retirement.
While their service to their community must one day come to an end, our mission to serve them does not. We're there with them, to and through retirement. Mission Square Retirement. Invest in a shared sense of service.
Tax audits, tax liens, wage garnishments.
Every day we hear stories like this about good folks who are simply struggling to pay their bills. Each of them are living a frightening IRS tax nightmare, and they are afraid it will destroy their lives.
I'm a divorced single mom, and my ex-husband left me and the kids with a lot of unpaid bills, including unpaid taxes. I was really starting to show my stress on my kids because the IRS had sent me a letter demanding a huge payment from me. I couldn't afford it. So then the IRS was threatening to garnish my wages. I'm already living paycheck to paycheck. That would have put me over the edge financially.
It truly seemed hopeless, but then a friend at work told her to call the tax relief line.
The people at the tax relief line, they told me about something called innocent spouse relief. They worked it out so that all of the taxes from my ex are not my problem. I don't know how that works, and I don't care. All I care about is that I don't owe the IRS a dime, and they are not going to take my paycheck.
Even if it seems hopeless, you should call the number on your screen right now. There is absolutely no cost for the call or the consultation. You are under no obligation. If you are worried that the IRS could garnish your wages, seize your assets, even take your home, call us right now. The Tax Relief Line is here to help you. Now you have a knowledgeable, professional team of tax experts that are ready to negotiate with the IRS and fight for you to save you money. The Tax Relief Line's professionals have successfully negotiated thousands of cases, reducing and sometimes even eliminating the tax debt for their clients. It's very easy to get started. Simply call the number on your screen right now. You don't have to live in fear anymore. The call and the consultation are free.
Welcome back. This week we discussed how the Connecticut Public Pension Plan returns may warrant calls for reform. Let's take a look.
Jeffrey, I'm so glad you asked that question and asked it the way you did. Is, believe it or not, nobody had ever taken a look at all 50 states. We thought surely there's a directory out there somehow that is some standard reference for how assets are managed, how pensions are managed around the country. Nothing existed. So we got a team of 18 volunteers, really super smart students, econometricians, and people who are experts in financial strategies, asset management, to devote 1,000 hours of volunteer time to go through state by state unraveling this. This is truly, I'd be a spokesperson for it. It's really Stephen and his team that did the heavy lifting to figure out how do we classify apples and oranges and oranges when we try to figure out what the assets are, and then what's the reporting schedule between calendar year and fiscal year, and also what's the hidden fee structure and with the compensation, and what's the performance. So what we found, you put all that together, it's not a red state blue issue, a blue state issue, but Connecticut, it's the bottom of the list. We're basically the second worst on a 3-year, a 5-year, a 10-year, a 25-year horizon, with all the asset management expertise and endowment management expertise and financial savvy in this state. We're doing a terrible job. And it means tens of billions of dollars of lost revenue that's weighing down our taxpayers. We could probably slice taxes in half if we had only gotten the average returns of the other 50 states.
It really doesn't make sense to us either, Jeff. You know, with our team of students, we went through the 50 state filings, the annual reports for each and every single state pension fund. And the differences that we found were striking to us. Connecticut is in funds that no other state is in. We're in funds where we're the only client of those funds. We're the only LP, which is an extremely unusual situation. When we went through the other 49 state filings, we saw that the other 49 states are in some of the blue chip funds, the funds that you and I would recognize. Whereas when we went through the list of Connecticut funds, there were really very few funds which were household names. Some of them, when we tried Googling them, we can't even find a website for it. We can't even find who's responsible for it now. So it's unfortunately, Connecticut stands out in a lot of ways, not the right ways. And the 50 state filings really draws that out. And I would just point out, Jeff, even though there was a team of students doing the legwork, as you said, we were taking our marching orders from Jeff Sonnenfeld. It was really this team and Jeff's inspiration. Jeff giving us the guidance and direction.
I just ask him the naive questions. That's what we Jeffs do. But he went off and did the heavy lifting. And what's really astounding there is in some of these funds, tens of millions of dollars went into people's pockets, and we don't know where that money went. We don't know where those funds went. They just dissolved. It's a really astute question. If it were bad luck, we would have random results, which would be billions of dollars more, tens of billions of dollars more in returns, because we'd have the average performance. That's what random would be. But in fact, this is unspeakably horrific results. This is a state treasurer over the past years, not the current state treasurer, who's brand new to the scene. We have very high hopes for him. He's saying the right things. He's a smart, apparently, honest, hardworking guy. We're excited about him. This is Eric Russell, the new treasurer. Past treasurers, different story. We don't know how they're making their decisions, but the advisory board they have is strictly that, Jeffrey. It's just an advisory board. It isn't like it's amazingly astute question you asked. Seriously, we ourselves didn't realize this till we got into it, that only 2 states have the situation we have, where you have the treasurer with sole discretion how he or she wants to invest the money. The advisory board is not, as you referred to it, a board of trustees. It's not a normal governance sector. It's not a board of directors as a corporation would have, or in the public sector, all the checks and balances you would have. But rather, this person just has the sole authority to make decisions. And when the advisory board had advised against some of these decisions, and even outside auditors did, the treasurer still overruled them, and she went ahead with these terrible investments. We put almost $2 billion into an incredibly bad fund that every other state has fired. We're the only state left that still uses them, and we're paying them about $50 million a year for terrible performance, and they only employ a handful of people. So those people they're making like $50 million as basically state employees. Because they don't work for anybody else but Connecticut, and they're giving us terrible results. $50 million. They don't even have a successful women's basketball team.
Jeff, I'm so glad you asked. This is one point that we've heard over and over again. We've had thousands of people write to us on emails. And folks we're hearing from, Jeff, it's regular people like you and me. This issue, when we first talked about it, people were like, oh, this is, going to be inaccessible. It's not. This is an issue which affects every single person in Connecticut, whether you're a Connecticut taxpayer who's having to pay extra taxes to plug the hole created by our terrible pension performance, whether you're a teacher or a firefighter whose investment returns are not as good as they should be because of our own incompetent external managers. This is an issue which touches every single person in the state. It's why it's so important. And these billions of dollars, there are a lot of ways we could have spent that billions. There's a lot of ways we could have saved those billions in taxes. It is a hugely important issue. A lot of it does come down to the fiduciary. We're one of 2 states in the nation, North Carolina being the other one, that has a sole fiduciary overseeing our $40 billion in pension funds. That is a remarkable system. You have a single person who's given complete 100% sole authority over overseeing $40 billion. That's remarkable. 48 other states have a different system, which is it's a board oversight system. Now, not coincidentally, what's the only state in the nation performing worse than Connecticut on our pension returns? It's North Carolina. Maybe there's no causation there, but that's certainly a very interesting correlation. And it speaks to the need for having a strengthened oversight system in place.
And it's not a red state, blue state issue. The top performers are states ranging from Arkansas to Michigan to Washington to the state of Maine and Rhode Island tower over us. Even Delaware does. And states at the bottom, again, it's us and North Carolina, as Stephen said.
And we also discussed business succession planning and having those conversations with your family. Let's take a look.
Well, I think the key component of it is, and bringing it back to our study, we had a high proportion of participants in the study say they feel like wealth, to your exact point, ruins families. And so when we talk about that Gen X population, 88% of the Gen X population said that. So while they're helping their children navigate all these, bill paying issues and financial issues, they also say, hey, and at the same time, I know all of that's going to ruin my kids. So what you want to do, the planning component of it, is to say to yourself, well, how do we get a bit more intentional with how we're using our money in our family? So 3 quick tips, Jeff, to really think through that. And I'd welcome any questions you have. The first one is to really start the process of having family meetings. So when you think of the show Succession, a key idea here is to say, well, where do we start that conversation? It's not about who gets what or who does what or, who's most powerful and important. That family meeting starts on family values. And so, think of it as 3/4 of our participants said that they recognize that values are the most important. So have meetings about how you value money. We do it in my own family once a week, 30 minutes. We sit down. Are we living our financial values as a family? So I do practice what I preach, Jeff. The second component of it, outside of this family values, is to get specific on whether you really understand how much things cost in a family. So that goes to vacations, firsts. We call them financial firsts in families. So it could be from buying a bike to buying a car to buying a house. Do you really understand how much it costs to purchase it and maintain it? And getting kids to either help with the purchase or help maintain it creates a lot of connections between the idea that money is super important, not only with think of it as buying the item, but the sustainability of it, which links to a lot of things going on in the globe today. And the third component of it is to really think of, if you want to have a child succeed or not succeed, a family business, think of it as talking about what the business does for the family. How important is it to you? So nearly 40% of our participants said the business added a lot of meaning to their lives. So that means, they employ people. A lot of business owners love that aspect of their business. They create value in the community. So think of it as someone who owns a restaurant or owns something where they're producing an item. Think of it even as the iPhone. It adds so much value to our lives. So is that something that you want to sustain and maintain? And is it a family member that wants to take that over? And how would you prepare them well ahead of time to take that over and see if they're actually capable? So those three items, the family meeting around values, really getting crisp on how important money is and the sustainability of purchases and activities. And the third piece is when it comes to a business, really saying, is that something we want to carry forward in our family as a legacy? And is there anyone in the family interested and capable of doing it? Become extremely critical conversations. You can be a sole proprietor. You could own a consultancy or, whatever it might be. You might own in a sense, a law practice. You might be a dentist, right? How do you want your family to participate and potentially take over that business? So the dentist I go to, for example, Jeff, is a family succession business. The son took it over from his mother, and she still comes in and works there, but it has meaning in our community, and everyone loves going there, the experience that they provide and also the services they provide. So I think you need to ask yourself two questions if you're watching this or listening to this and you're having that struggle as a parent or as a potential successor, Jeff. I think the first one is, why are you pushing back, or why are you receiving the pushback? So sometimes what we see in family dynamics is, the younger generation, Jeff, wants to make it their own. And so are they being forced into something, or is an idea or the business being imposed on them? Or are you giving the ability for it to adapt and transform in a different type of way based on the interests or the desires of that successor? So that's a key and critical question, because if it's closed, Jeff, that's where we see the most negative dynamics. I'm telling you rather than doing it with someone. The other piece of it, Jeff, is that can provide information as well, right? If someone's not interested in participating in this family conversation, or they're not interested in participating in, let's call it the work effort associated with the family dynamic around the business, around the money, around the values, that provides critical information as to, well, then is that person someone that should, in a sense, participate in all the benefits as well? And that's an important conversation to have amongst the family members who are putting in that effort and time.
Well, great segments. I want to thank all of our great contributors this week. And that wraps up this episode of BRN Weekly. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the latest security news and lifestyle, wellness, finance, tech, so much more, and all in one place, check out today's edition of our daily newsletter, The Morning Post. Want to search our archives, check out our latest content, visit our website, and of course, all of our streaming partners. We're back again tomorrow for another edition of BRN Sunday. I'll be joined by members of the media, academia, financial services, government, and a lot more as we break down all the news and events for the week. You're not going to miss it. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes. Now is your opportunity to co-create content around any topic on the first lifestyle and wellness network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.
Are you being audited, and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.